Hey guys, Richard here, and in this video, I'm going to be covering cash flow and basic finance management. We've seen a fair number of people posting questions about these topics on both our Facebook group and the forum. And although I am not a professional accountant and I offer no legal or financial advice here, I do have some tips and systems we put in place to manage this for our own operations, which I'll be sharing here. First, I'll go over some basic financial tracking. I'll show you guys how we keep track of our cost of goods sold and a profit and loss sheet to help make better business decisions. After that, I'll cover cash flow management. I'll show you how to avoid running into cash flow issues by calculating your daily expenditure and accounting for delayed payouts. Let's get to it. As you grow, it's crucial that you track all of your finances so that you can know exactly where everything is going in your business. What gets measured gets managed, and what gets managed gets done. Finance comes down to accurate tracking. There's really not that much to it, but it'll help you immensely with making intelligent business decisions and help you sell your business later on if that's what you want to do. Also, you'll be better prepared for tax season, which is always a plus. Before we go on though, I want to clarify that while we do recommend that you do some amount of financial tracking and counting on your own, you should still consult with an accountant when it's time to actually file your taxes. They'll make sure that everything's in order and help you file the relevant paperwork with the IRS or other tax equivalent if you live outside the US. Today, I want to go over two spreadsheets that we frequently use to keep track of our finances: the COGS spreadsheet and the P&L sheet. In this quick tutorial, we're going to cover the sample cost of goods sheet here that we're using as a template. Starting with the date. So we mark down the date of the order that's being placed. We want to track that. We want to track the cost of the product separately from the shipping, and then adding the shipping cost. And these two together are going to add to the total cost here. AE in this case stands for AliExpress, but it can be the total cost from a private supplier, including the shipping cost. By tracking these, we're keeping track of our daily expenditures and figuring out how much cash flow we need on a daily basis just to cover the cost of the goods. And that's the cost of the items that we're buying from our suppliers to send to our customers. Now we want to match that to the correct Shopify order number to keep track. And we can even add the cost paid by the customers, how much the markup is, which auto calculates to the profit margin that we're getting on this product. In this quick tutorial, we're going to be covering a sample profit and loss statement, where the first column we'll take a look at is the name of the store. In case you're running multiple stores, it does help to create a profit and loss statement individually so that you can make better and more intelligent business decisions for each store separately. This month stands for the month that you're running this in, so we'll keep track of profit and loss statements by month, typically. In the next columns, we're going to be looking at revenue. So for gross sales, this will be the total amount of revenue generated by your store in that time frame. Less means anything that takes away from the gross sales, including returns or any other expenses that pull from the gross sales. Subtract those two and you'll get your net sales. And that's the total amount of revenues that are coming after returns or any other sorts of allowances. In the next bit here, we'll be looking at the cost of goods sold. This whole section here is if you're dealing with any private suppliers and you've bought inventory in advance, which helps you keep track of that. If you're drop shipping, and that's the beauty of drop shipping, is that you don't need to have inventory to sell to your customers. If you're purely drop shipping and you have no inventory, you can go ahead and put a 0 in inventory and a 0 for ending inventory. Then we'll only need to track the cost of goods sold here, which is going to be pulled from your cost of goods sheet or your other tracking sheet as a monthly total. And we'll subtract the net sales from the total cost of goods sold, including your inventory costs that you may have bought in advance, for the gross profit. Next, we'll look at all the other expenses here. We'll add up the cost of advertising, any fees from your bank, software like Shopify or Dropify or any other of the tools that you're using to help you run your store, commissions, contract costs, which will be the cost of your employees and freelancers, or you can put that under wages depending on how you've structured your company. Dues and subscriptions if you offer any employee benefits, if you're running a corporation that's required to have employee benefit programs. Insurance, interest, legal and professional fees, including consulting or anything that helped you run your business during that time, if you're using a marketing service, which I don't recommend. Any licenses and fees that are on an ongoing basis or one-time cost during that month. Anything extra in the miscellaneous section. Office expenses, including computers or anything that relates to being able to run your e-commerce business on a physical level or software level as well. Payroll taxes, postage, rent, repairs and maintenance, all very straightforward stuff. Any sorts of expenses that fall into supplies, telephone bills, appropriate business travel, utilities, disputes between different parties that result in some sort of fee, and wages, which also tie into potentially contract labor costs. So we're adding up all of the costs from running our e-commerce store to a total expenses column, which should auto-calculate based on what you've racked up in regards to fees. And we'll have a total net operating income as a result. Under other income, we'll include any sort of shipping costs, which are charged to the customers in this case, because shipping, if you're charging shipping and you don't have a worldwide free shipping program, you can include this here. Under interest income, this can be from your bank accounts, etc. In general, you're not going to be paying attention to this too much. So after we've added this all up, we can get a total net income, which will be your profit that you're taking home into your bank or into your company and that you can pay yourself out with. And really, that's about it for basic finance operations. By doing these things, you should have a good idea of how much money you have going around, as well as where it's going. Now that you have an idea of how to keep track of expenses, let's take another look at an important aspect of your back end, cash flow management. When you're just getting started, chances are you don't have a business card with a massive credit limit. In fact, if you're like most people getting started, you might not have a credit card at all. If that's the case, don't worry, we've all been there. Despite what you might think, it's entirely possible to run a business on a debit card. Sure, you might not be able to scale as fast as you like, but if you properly manage your expenses, you can responsibly grow your business without running into problems. Luckily, managing cash flow isn't all that hard. All you really need to do is calculate your daily expenditure and make sure that it doesn't go over what you have in your bank account on any given day. Calculating your daily expenditure is pretty simple. It's usually just the sum of your cost of goods sold and your ad spend, coupled with any other fees you might incur, including labor cost. Now, one more thing that you might need to account for is the payout delay between the time the money is paid out from your payment processor to the time it hits your bank account. This will vary depending on who your payment processor is, as well as where in the world your business is established. You can get more specific details about your payout schedules from your payment processor's website. As an example, let's say that you're using Shopify Payments and you're based in the US. In this case, there's a 2-day business delay between the time you make a sale and the time when it gets deposited into your bank account. So any sales that you generated on Monday won't arrive into your bank account until Wednesday. Similarly, any money you make on a Wednesday won't show up in your account until Friday. Now, here's the tricky part. You don't receive any payouts on Saturday or Sunday, so any sales generated on Thursday, Friday, or Saturday won't arrive until Monday. This can be problematic, especially if you're running a daily budget close to your total cash stack. So what you would have to do here is calculate what your balance would be a day from now, 2 days from now, etc., based on when pending payouts are due to hit your account, and an estimate of your daily expenditure. That being said, this can get tricky, assuming that you're either profitable or break even. And what we recommend is that you don't have a daily expenditure that exceeds 40% of the funds you have to work with. So if you have $1,000, you shouldn't be racking up more than $400 a day in daily expenditures. This will ensure that you can maintain a consistent daily expenditure throughout the entire week, and you won't have to scale down or turn off your ads. It will also account for up to 20% increase in daily expenditure as a result of increased ROAS or Facebook spending a bit more than your daily budget. And really, that's about it for the technicals. To wrap things up, here's a few extra tips to keep you out of financial trouble. If your daily expenditure is close to 40% of your cash stack, don't scale too quickly right before weekends or during weekends. If you're going to scale, run your daily expenditure calculations for the next 2 days to see if you're going to have enough money to cover your expenses. If you've mismanaged your daily expenditures and you don't have enough money to continue running ads, turn them off. Always prioritize placing existing orders over bringing in additional orders. Delaying shipments just isn't worth it. Alright guys, that's about it for the finance part. In the end, it all comes down to accurately tracking your expenditures and ignoring the urge to scale when you're not supposed to. Just be smart about things and you'll be fine. I'll see you in the next video.